Hello everybody, welcome to a brand new episode of Geeked. Today we'll be talking about chapter number 2, Introduction to Financial Modeling. This is a good chapter. It contains plenty of material that we're already familiar with, like the balance sheet, the income statement, statement of change in equity, and cash flow statement. It also has things like free cash flow, market value added, and enterprise value added. These are concepts that we will become familiar with after this session is done. Balance sheet. What is balance sheet? Simply put, it's a sheet that shows the value of the firm's assets and liabilities at a certain point in time. Equation: assets equal liability plus equity. Why is it that way? This is a question that you may be asked on your midterm. This is a question that you may be asked during a job interview. Why is it that way? Simply put, a firm acquires assets through issuance of debt or equity. A firm that needs money will either borrow money or issue shares. And debt versus equity. Why is equity more expensive than debt? Creditors have first claim on the firm's cash flow. Equity holders, they have residual claim on cash flow and asset value. Debt also, it's got a tax shield and enjoys a tax shield. Okay, one more point here is more debt equals more leverage. A firm with more leverage will be able to make more money. On the other hand, their losses will also be magnified. Income statement. What is an income statement? It's known as the statement of comprehensive income also. It shows revenue, expenses, and net income over a period of time. This could be a quarter, it could be a semi-annual income statement, it could be a yearly income statement. The equation, revenue minus expenses, gives us income. And net income is split into cash dividends and retained earnings. And now this is where net income and balance sheet are connected to each other. When we look at a balance sheet and income statement, how are they connected? The beginning retained earning on the balance sheet will have net income added minus dividend paid, and that'll give us the closing retained earnings account. And income statement continued. How can a company show a net income yet still be in trouble? One answer: accrual accounting. Revenue and expenses do not reflect the flow of cash, and expenses are recording in accordance to the matching principle. This is something that we've learned in accounting. Expenses must be recorded as soon as they are accrued. They are not something that you should record once you pay the bill. For example, you owe $100 for a telephone bill. You should record that telephone bill for the month. You should not wait until you pay the $100 bill for you to record expenses. This is where things get a little bit tricky, and this is where we have a discrepancy between cash flow numbers and net income numbers, or income statement numbers. Okay? And net income does not equal to the cash in the firm's pockets. Okay, another example we can look at is depreciation. This is a non-cash item that'll show a discrepancy between cash flow statement and income statement. You buy a truck, $20,000. It's got a useful life of 20 years, and you are asked to record depreciation for the first year. $20,000, we're going to divide that by the number of useful lives, or useful years. 20 years, we get $1,000 a year of depreciation. Now, how is that going to affect things? Simply put, our expenses are going to go up by 1,000, and our accumulated depreciation will also go up by 1,000. One more thing on the balance sheet you can look at is your retained earnings will also decrease on your balance sheet. That is something that should have been shown on that slide. So retained earnings will also go down. Okay, but did we actually pay that 1,000? No, we did not pay that 1,000. It's a non-cash item. This is where things will look much differently on your cash flow statement. Statement of cash flow. It shows the inflow and outflow of cash. It's broken down into 3 different categories. Operating activities, net spending from operating activities of production and selling. So we're typically looking at things like inventory, accounts receivable, accounts payable, Expenses, depreciation, these are all things that will fall under operating activities. We'll look at investing. It's net spending on CapEx, or net spending on capital expenditure. What does that mean? The purchase of fixed assets minus the sale of fixed assets. I'll give you an example of that. If you buy a truck for $20,000 and you sell your old truck for $5,000, that means your investing activities will go down by $15,000. So the net spending on trucks is $15,000. How is that? You bought a truck for $20,000, you received $5,000 for selling the other one, $20,000 minus $5,000, $15,000 on investing activities. Okay, financing activities, we're looking at net spending from bondholders and shareholders. It includes things like repayment or issuance of debt principal, dividend payment, and new equity. Now on to the new material here, free cash flow. This is a very important concept in finance. This is a concept that you will come across your entire time in finance. Is very, very important. And if there's one item that you want to examine when you're looking at a company, just one item, I suggest you would be looking at free cash flow. Tells you a lot about the company. This is cash remaining to pay interest on debt, pay back principal, pay cash dividend, buy back stock, and buy non-operating stock. What is the formula for free cash flow? We're looking at NOPAT plus depreciation amortization minus changes in net working capital minus change in CapEx. I'll break down this little formula in our next slide because I know things look a bit foreign here. What is NOPAT? What is changes in net working capital? And what is changes in CapEx? Okay. When we look at NOPAT, we're looking at EBIT multiplied by 1 minus tax rate. So EBIT is your operating profit minus the tax. You will get net operating profit after tax, NOPAT. Depreciation and amortization, we know that it can be found as an expense on your income statement. Changes in net working capital, what is that? What is changes in net working capital? It is changes in current operating assets minus current operating liabilities from year to year. CapEx, it is the net change from the purchase of sales of fixed operating assets. It typically means the PPE section, which is the power, plant, and equipment section of your balance sheet. Okay, next slide. Market value added. What is market value added? This measures the effectiveness of managerial actions since beginning of operations. It's calculated by looking at difference between market value and book value of the firm. Market value added typically means market value of equity minus book value of equity. Sometimes debt is included, and that's why I put that in parentheses. So market value of equity and debt minus the book value of equity and debt. What is market value of equity? Very, very, very simple. You look at the number of shares that are out there, multiplied by the price of these shares. Okay, as for EVA, enterprise value added, measures the effectiveness of managerial actions in a given year. There are two ways of calculating this. It could be operating capital multiplied by ROIC, which is your return on investment capital, minus WACC. The other way of calculating it is NOPAT minus operating capital multiplied by WACC. So I put a note that. What is ROIC? ROIC is NOPAT divided by operating capital. It is your return on investment capital. If you really examine these two equations very closely, you'll realize that it is the same thing. Considering that ROIC is NOPAT divided by operating capital, break both equations down and totally the same thing. Just finance sometimes try to confuse you, but I encourage you to break things down and understand how things are being done. This is going to be everything for today for chapter number 2. I encourage you to go over this video again. I want to thank you for your time, and if you have any questions, please feel free to put that in the description. If you have any exercises that you'd like solved, also you can direct my attention to that and I will take care of it. So thank you for your time once again, and I look forward to doing the next session.